Hey, John, are you there? John, how are you, my friend?
Good man, how are you?
Yeah, very good. Before you say too much, we're recording this. I know we normally have our monthly get together, but I wanted to do this slightly different this time because I just thought we could record our monthly catch up on the market and talk a bit about where we see the market, but make it live and then we can share it with our clients. I've put you on the spot. Are you okay with that?
Okay, well that's good. Let's I'll get some recording now, so no problem. Let's do it.
That's
We've
good.
got a lot to talk about, man, because some big stuff's coming out. Like obviously just the last couple of days, there's what we've been doing this, I guess, this prezzo, and we've made some big predictions. It seems like we've got to talk about it. So I'm glad you're recording. Let's do it. Let's make it live.
Okay, it's funny because I've been watching a few videos lately, and people are saying they've predicted this and they've predicted that, and it's always easy to predict something when it comes out. But the actual fact is, we've been doing these webinars, and you can click on some of our links below that we'll post up that were, I guess, before the stimulus package introduction or the discussion that's come out just over the last couple of days. And we spoke about these stimulus packages and the effects on what happened with the marketplace at that time. So I just want to say, if you guys are interested in looking at our previous webinars, click on the link below. But also, we conduct these webinars every few weeks and update people on what's happening, in regards to COVID, market situations and certain things like that. But hey, let's stay focused, because we normally get together every month, more regular than that. But then we recap the previous month. And I guess the reports have come out for May. And once again, no major drops. What's your thoughts on that?
Look, no, like obviously the May figures from CoreLogic came out for the I think it was a couple of days ago now, and no surprises, no major drops over the month, which was obviously we were expecting. To me, June is still going to be the big number that I'm probably going to be hanging my hat on. But look, what was interesting was, for me, that we saw Brisbane really not move, very small movement there.
0.1%, I think it was.
It was like 0.1%, so nothing really significant. Melbourne was probably the big one that everyone's earmarking as we said, was going to be probably the one with pain, or the most pain, less gain, largely because it's going into COVID with a big supply, legacy of existing stock. It was going into obviously a market that, if it had its population, which obviously we all know is mostly made up of overseas migrations, that obviously props up its property market, and that a lot of that supply was earmarked for that. That's been turned off, and ultimately as well, it was an inflated market. It was an expensive market with no real income to support that huge price. So it's obviously going to receive probably the most pain, and that's what we're starting to see now. So, then came Sydney with probably the second largest, I guess, softening, as you could say. Yeah. But, for me, Joe, it shows that ultimately across Australia, we just take these capital cities, and, at the moment, those big slump figures that everyone was sort of talking about has not come through yet. So look, it's still early days. To me, this is going to be something that we're going to monitor every month. People are going to probably watch the property market more than ever. And I think also the banks are watching it more than ever, because we've already seen, Joe, we're seeing some
projections, right?
Mate, completely. These big predictions that came out, Joe, we said it like, guys, it's too early to make these big statement predictions on the market, because there's just too much to come. Like there is so much that can affect this, and we've already seen it. Joe, I think you called me on Monday at like 6 o'clock saying, I've heard something, they're going to stimulate early. They're coming, John, it's coming. And you're right. We've seen the government announce, Joe, you said it, like that we were going to come a second wave of stimulus. They're going to focus on the construction industry. They're going to focus on the residential. And, Joe, you were saying that there's some news coming that way.
But when you think about it, there's like when you look at 1.4 million people are currently employed in the construction industry. The construction industry represents 10% of our GPD. And so it's a large industry. And even when you go back, just when the GFC hit, the number one industry they stimulate to I guess restart or kickstart the economy again is the construction industry. In actual fact, I think I've read a report recently talking a bit about the construction industry represents it's the third largest industry in Australia behind retail and health. But I think you mentioned something. It may be in numbers, but in the economy where it injects money, the construction industry is actually larger than that because wages are obviously high, right?
Well, look, you definitely got the wage component of it. It is a very big market. It supplies it both on the ground, say a blue collar level, all the way through to white collar, and then it comes down to resources. Yeah. So this is something for Australia that is big deal for us. It stimulates. It can stimulate not just from a local employment level, like say for someone who's picking up the hammer or picking up the bobcat, not picking up the bobcat, but driving the bobcat, but like all the way through to the engineers, through to civil planning. It just goes on, and then into the banking sector as well. So like there's a lot of work here, and that's why they know that it is a cornerstone of the economy. And if you look globally, this is going to be something that we keep saying, is that this stimulus is going to happen globally. But it is, to me, what I'm seeing across the world at the moment is turmoil. Australia's looking very, very good from an economy point of view. And remember, like I think in the coming preso that we will do, Joe, I'm showing people at the moment, what I think is really important is that Australia is actually investing in its people. That's what I've seen. The whole thing that I've seen with this COVID is that the first stimulus we had got criticised, obviously, as a legacy problem for Australia, that we're going to have all this debt. No, what we should be saying is that they've invested in Australians. Yeah. Every one of us has been invested by reducing the debt toll, by controlling COVID, and hopefully getting our economy faster. This is proving at the moment to be the best strategy that the government has done, and will pay dividends for us in the coming year, plus. Because to me, that investment means a healthy country, back to economy. How does that mean when we start producing the goods for the world? And this is already happening. We've seen, I don't know if everybody's seen this, but Australia at the moment is in a trade surplus for its iron ore. Iron ore at the moment is in huge demand, and its price has actually gone quite high for, per ton for the US dollar. I think it's now at about over 100, because at the moment it's in demand. Brazil is probably one of the biggest producers of iron ore outside of Australia. If it's under COVID, which we know it is, and it's going through some bad time, it can't produce it. We said, you watch the world. I'm watching the world, because how the world works is through circulating that trade, circulating money, and that's changing now. Our Australian dollar is also getting propped up.
Yeah, by 25% or something like that.
It's surged. It surged from like a low from in March. Now it's at a high at 68 cents to the dollar, US dollar. So we're seeing, these sort of indicators to me are positive. GDP comes out today as well, Joe. So as I think I've mentioned before, we'll see how that comes out. It's going to probably show a negative, but I mean, will it be the big negative that everybody predicted? We'll see today, and hopefully we can announce it. But really, there's so many indicators that are showing Australia at the moment.
Well, let's talk about the stimulus package. They talked a bit about they're bringing out a few things in regards to, anywhere potentially up to $50,000. I think they're obviously marked that figure $50,000 to present to the government, but I'm assuming that it would probably come back. My predictions are probably $20,000 to $25,000, possibly $30,000 grants, and it's going to be heavily driven on new construction. There's a couple of phases there. There's new construction. There's also renovation, and I think we spoke about that a few days ago in regards to how are they going to solicit that? How are they going to monitor that? I'm not quite sure.
I feel like that's one that can really be gained. Be interesting to see how they come out with that one.
Yeah, and then they're talking a bit about it's going to be the first 50,000 people. There's a bit of unknown in the air, but what I can say is I'm getting clients call me now, and first home buyers are saying, how do I capture this first home, this potential grant? It's actually not a first home buyers grant. It's just a grant to stimulate the economy in the construction industry. But there's also talks about this would be a grant outside of the state funded first home buyers grant. So if you're a first home buyer and you're entitled to $15,000 and then there's a $25,000 grant, effectively that's like a $40,000 grant, right?
Well, look, yeah. I mean, if we tackle, like, say you're getting the state level grant, if you're in Queensland, you're getting $15,000. If they then offer this federal one, which is up to 25 to 30 or whatever it comes in at, you're looking anywhere between 30 to 35,000 potentially coming into for a first home buyer. Now, that's a big shot in the arm. That's a really big shot in the arm here.
And then if we go back in history, John, let's just go back to the GFC, because that's probably the last time the government really injected a lot of money into the construction industry. And we saw some of the markets across the board. I think you've got some good figures. I know you're a very detailed person in regards to, you want to know the exact percentage. And we spoke about it last week. I think it was, what was it, between 2008 to 2009, October, is that right? Between that period? The market grew anywhere from 9 to 13%, correct?
Correct.
So imagine
that's a space of 1 year. So we've got to think, coming through the GFC, 08 to 09, like we remember we had unemployment as a problem, we saw finance as a problem, but the Rudd government did stimulate through, obviously, the first homeowners grant, which we've discussed this in our preso, so obviously click on the link. But, the first homeowners came in, we saw NRAS, which is the National Rental Affordability Scheme. We then saw massive influx of investment going into hospital renovations and upgrades and building new hospitals. We saw education facilities, so obviously all the schools, they were able to apply for big stimulus to upgrade their schools. And then we saw fast track of construction.
It's like they do. It really is, because that's exactly what's happening at the moment. They're bringing forth construction that was meant to be done 3, 4, 5 years down the track. They're extending railways. In actual fact, they're talking about creating over 200,000 jobs. So it's exciting times. And people say to me, Joe, is it the right time to invest? And truly, if you just consider the grants, and if we look at history, the market grew just say 10%. So numbers are easy. We're talking about, if you bought a property for 500,000. 10% growth in 12 months is 50,000, plus your potential grant, which is about 40,000 potentially if you're a first home buyer. These figures aren't exact yet, but we're talking about a potential growth of $130,000 equity, or capitalizing about $130,000. And I always say to people, when was the last time you've saved $130,000? And even if it's half that, when was the last time you saved $70,000? So I always believe that property is long-term, but if you look at history, and when the government's invested a lot in our construction industry to stimulate the economy, and when we've gone through, I guess, these current climate conditions in the past, the property market has bounced quite quick in a short period of time. And if you're an investor and you want to capitalize on that, I honestly think you should really, explore that option and, reach out to us, and maybe we can have that 15-minute discussion to see if it's something that you're interested in. And if you're not ready, to inform yourself and educate yourself, and click, either click on our previous webinars that we've done, or join us in our upcoming one so we can keep you updated. So what's your thoughts on that, John? What's our next webinar?
I think our next webinar is going to be, I think, the next phase of this. Like, for me, we made a lot of predictions at the start about what we were going to see in the market. I'd like to be tested on my predictions, and let's see if what's happened and what hasn't. Look, it's not about being right or wrong for me. It's just more like, okay, we made a forecast. Let's adjust and go. And I think there's going to be a lot of forecast changes.
And we're already starting to see that, right?
In the coming weeks, you watch. I think there's going to be a lot of these guys, and we saw it. Remember, like, we saw interest a couple of 2000 and I think it was 17. Big interest rate predictions of like increases, and then big forecast changes. Like I said, guys, like, this is how it works at the moment. I said it, I called it, I said it's way too early to call this about a big prediction on the market, having impacts. I still believe there will be impacts. Joe, for me, the next presentation, I think we got to call it. Let's work hard and say, okay, the markets that we would think are probably going to have a bit more, I guess, less volatility versus other ones, right? So to me, the stimulus announcement is coming out. Hopefully it's this week. It potentially might be next week. So obviously we'll be able to talk about all this. Let's organize a job. I think there's some stuff that's coming out here that I think everybody needs to be abreast of, and hopefully we can do it quickly, because it's going to change. I think I still say this, guys. Australia to me, this could be the biggest opportunity for Australia and its economy globally than ever before in history. It could position Australia as a major, major economy.
Well, I was looking at
actually happening across the world, and that's what I'm thinking. Is that like we are looking really, really good. Like there is absolute turmoil right now in the US market. There is absolute turmoil.
Actually, you've got your background. There's a dark background and a white background there. Is any particular reason for that? Is that just your feature wall?
Not planned. It is just a feature wall. But look, it is. You know what is happening around the world, Joe, is
very sad.
It's the fallout of all this at the moment is uncertain. You know, Australia is positioning itself very well coming at it through COVID. If it can continue this way, to me, this is a big deal. So
you know, have this perception. We'll finish it up short now but people have this perception. And sorry to put you on the spot, by the way.
You've done a great job. I've really had to.
People have this perception that China is our number one investor, but currently at the moment, you know, China is our fourth biggest investor in regards to the construction industry. We have America that's number one, and I can see why. You know, we have Canada. And I think I've got it here somewhere. Canada. We also have Singapore, Japan, and then China comes into play. And so it's not just China. And they're actually starting to come back into the country to invest. But it's not just China that's our major investor. People have this thing that China controls all our assets. But that's not necessarily the case. There are other major players, other major investors.
We're going to see more. Guys, we're going to see more of this. Like, we're going to see people look into Australia. Like, I've said this. We said this, like, you know, what, 60, 70, 80 days ago, we said that Australia, if it comes out of the COVID-19, you know, race fast, and better in the place and economy with a healthier people, which, you know, as I said, they made an investment. Our government has made an investment into its people. Yeah. Very, very different to say like how the US and the UK markets, they have not invested in their people. They invested in their economy, and now those are set to fall. So what that means is that if you've got a healthy people, you've got an economy that can get back functioning.
And they've even talked about extending the JobKeepers allowance, moving out of September, phasing that slowly out. So there's a lot of things that are uncertain, but what I can say that the government hasn't left us stranded. And so there is good out there.
You know, like I think, Joe, there's going to be no shortage of exciting information that comes out. I think the key thing is that you've just got to watch out for the doomsdayer. Because at the moment, I think they're actually being shown how wrong they are. And it's not about being a doomsdayer or a spruiker. I think it's just about being logical and realistic. And I think hopefully that's what we're trying to do, is just be guys one step at a time, one day at a time. But there are opportunities, and that's what we're looking for. It's avoiding the pitfalls and looking for the opportunity. And that's what this market always creates.
And I think if you're wanting to know more information where the opportunities lie, join us on our website, on our webinars, because that's what we fundamentally talk about. We talk about the market, where the supply and demand is, where we see opportunity, what we focus on now coming out of COVID-19. And there are great opportunities out there. So, you know, join us on our next webinar, and we'll put the information down below. And John, I will sign you off for now. But hey, I want to thank you so much for, you know, take it live on the spot recording. But we touch base again. I think we should do this monthly, because we normally do this, but it's not normally we don't normally record it and post it. But I think we're going to start to do that, give you guys a bit more inside information.
I reckon it might need to be fortnightly, because at the moment, month is a long time. But what I reckon you need to do, Joe, is just give me a little bit more notice, and hopefully I can pull up some more stuff for you. So
well, next time, just make sure you're ready to go. You know I'm going to do it. Okay.
Thanks.
Hey, you take care, buddy. We'll talk soon.
See you, Joe.
Thank you.